Now we have Amit Agarwal, Group CFO, Raymond, to talk more about the growth which these brokerages are alluding to. Amit, thank you very much for your time. Talk to us about the growth strategy the company has laid out and making analysts so positive that they see almost 24-25% kind of earnings possibility on a CAGR basis going forward.
I think China Plus One is playing wonderful for us as a country, and especially for the Raymond Group, which is we are an integrated player right from the fabric to the finished garment. We are able to deliver to the exporter, be it the big players like JCPenney, Macy's, and the big brands all across the globe. I think we have been very, very fortunate that the order increases have been significant. And if I look at it, we are putting almost increasing our capacity by 1/3 more, and we will be in the top 3 suit makers in the world in the next 18 to 24 months. Currently, we have delivered already good growth in the revenues in this business with a decent EBITDA margin. So overall lifestyle, we are seeing very, very good growth opportunity. Similarly, coming on to the real estate business, I think there's a similar thing which is happening, because in the real estate business, you are seeing already a large opportunity in terms of that we have Thane land. Of this Thane land, we have taken or considered for construction to the tune of 40 acres out of a total of 100 acres. 60 acres still to go. So the total revenue potential is close to 25,000 crores, of which 9,000 crore has been exploited and 50% of that has been sold. So therefore, we see a very good opportunity in terms of selling that.
Right, Mr. Agarwal, this is Vinny joining in the conversation as well. Obviously, you've spoken about that good growth in the lifestyle business. Real estate business also, you're saying, has seen a good pickup as well. And this is just before the festive season, which is around the corner, when you usually see a pickup, especially in the apparels, a lot of bookings coming on the real estate front. So let's talk about apparels. How are you seeing the demand there? What is the uptick there? And in Ethnics, that is a brand which you have as well. What is that also doing? What are your expectations?
Yeah, so absolutely. I think we have seen that the many dealers networks, we had a booking season right now, 10 days back, and every single dealer was very, very encouraged as they are expecting a significant demand, both from the festive season, as well as we all know that there won't be a wedding in India where a Raymond suit does not get stitched. And actually in the summer this year, because of the weather inclements, there has been a delay or postponement of some of the weddings from a summer to winter time. And I think we are feeling very, very confident that we see a very strong traction, but it will be in the second half of the year. And the reason being simple, that in the second quarter, that means July to September quarter, there's this concept in Hindi calendar of one extra month, and that delays everything, festivals and everything, by almost 20-22 days. Plus the Pitr Paksh is there up till 15th of October. So everything gets delayed. However, we see that H2 will be much stronger, considering that there are more number of weddings, festivals are there. And on top of it, if you look at it this year, right from January, February onwards, the retail has been very, very slow. So when the retail has been slow, people have not gone out and spent money. It can't be a stoppage of spending for more than 7-8 months. So I think overall, we see quite a positive sentiment on the buying pattern. As far as Ethnics is concerned, we have already opened almost 70 stores, and this wedding season and festive season would be the true testimony for the collections. So far, we have got very good positive feedbacks from our customer base. The franchisees are all loving the collections, but actually we will be able to witness the truth into all that somewhere in the month of October, November, December, when the real sales happens.
Right. Amit, in the past, you have mentioned that you're expecting mid-teen growth in your lifestyle business over the next 3 to 5 year business, and high 20s kind of growth in your real estate business. Are you confident of achieving that? Are you sticking to your target, or do you scope of overachieving it?
There's absolutely no doubt about it, because very clearly, if you see, we talked about the lifestyle business, but let me talk about the real estate. Because in the real estate business, as we speak today, we are constructing over 5.5 million square feet carpet at the Thane. which is just the 40 acres of land. We have still 60 acres of land at Thane to go. So, and we have already signed one JDA project. We are on the process of closing another 2 or 3 JDA projects over the course of the next few months. So I think overall, we see very clearly that we are very, very comfortable to achieve the real estate growth, which will be far higher compared, because the base is low. Today, our base is, last year we delivered 1100 crores. So the base is low. So on that basis, we see clearly a much stronger growth path on the real estate side.
Right, and one question that's on everyone's mind is by when do you actually expect the listing of RCCL as well as the real estate business also? What is the outlook on that front?
No. Actually, if you see, in April, we have already announced the demerger. The process has been put in place. And we are currently waiting for the various respective authorities' approval, which should happen. And we have given the timeline at that point of time, 12 months. We are absolutely on track for that 12 months. I think by April, May of next year, we should be able to list the two businesses separately.
Amit, you have significant liquidity surplus of over 1,500 crore right now at the group level. How do you plan to use these funds going forward in your growth?
As we mentioned, that we don't have a very large capex cycle to go, because the businesses are such that we are deploying more and more on a little bit on the outsourcing model, and especially where the capex will go is on account of the garmenting business by incrementing 19 lines, spending almost 200 crores. That will enable us to become the top 3 suit players in the world. Now, that is one part. The other part we talked about also on the technology investments. I think we have lacked a little bit of technology investments in the recent past. So we are going to put another 100 crores of technology investments. But on top of it, we are not seeing any large capex cycle. So therefore, our business would have the money available in terms of deploying into the growth of the business. And that reflects, for example, Ethnics will have slightly higher number of days in terms of working capital vis-a-vis the other business. But we are not investing capex into the store opening. All these 500 plus stores which we will open is a franchisee-led stores. So therefore, there is not large capex. Similarly, on the real estate side, if you look at it, we have seen very clearly that the cash flow generations of the business on the real estate side has been very, very good. As we believe on a simple philosophy that build fast, sell fast, and collect fast. So I think that has actually worked very, very well. We sit on 400 crore of cash in the real estate business from the buildings which we have constructed, delivered, and continue to construct. So I think that way we see there is a good opportunity for us to deploy money into the business in terms of working capital, but not compromising in number of days. We are not going to increase the number of days significantly, maybe 1, 2, 3, 4 days here and there, but not by increasing by 10, 15 days. Seasonally, yes, but not on an overall basis. I think that's the way we want to see and grow the business.
Okay, Mr. Agarwal, thank you so much for joining in with us this afternoon on ET Now.